Good morning. My name is Grainne Gilmore. I'm Head of Research at Zoopla, and over the next 15 minutes or so, I'd like to share with you our outlook for the market over the rest of this year. Now, as ever, I hope our data and insights will be of use to you when it comes to making your business decisions in the year to come. So I want to look at three main areas. First of all, activity, first in the resales market, and then focusing in on new homes and how that compares. Secondly, looking at pricing and the factors feeding into that to then share with you our outlook for the rest of the year. So first, we have demand rebounding. Now, this chart really relates only to the resales market, but it really sets the tone for what's been happening in the whole of the UK housing market since we had lockdown and then since the English market opened on the 13th of May. So this shows us that demand, and we mean here buyers with really strong intent, we see that level as at 40% higher than the beginning of March. That is no mean feat. We had a really strong January and February in the housing market in the UK. When we break it down region by region, we can see more kind of nuanced trends emerging. So that green line is what's happened in Wales. It took a bit longer to bounce back because the Welsh market was shut right up until the 22nd of June. Similar story in Scotland, where the market has only just reopened. So it's that difference there between the rest of England and London, which is quite interesting. So we've seen a rebound in both markets, but London just lagging. Both markets now moderating in terms of that demand bounce back. That's only to be expected because that level of growth in demand really couldn't be maintained. So that's kind of an expected level of just levelling off levels of demand, but still for the rest of the UK, 50% higher than the 1st of March. What we're also seeing is that that demand is translating into sales agreed in the resales market, now above 4% where they were back at the beginning of March. And just to put that in context, that's 20% higher than we were this time last year. The number of sales subject to contract 20% higher than 2019. And again, when we break that down by region, you can see the English regions leading from the front, London just lagging a little. It'll take Wales and Scotland a while to catch up because their markets have only just reopened. And also new inventory coming to the market, people choosing to list their homes for sale, perhaps because they're thinking they want to now move on to another home. But just one thing I would draw your attention to here is the gap between the purple line and the green line, because that supply-demand imbalance is actually putting slight upward pressure on pricing at the moment. So now to the key facts, what's happening in new homes. Well, you can see that bounce back in demand. That's the purple line from the beginning of March to now in the resales market, averaging around 46%. For new homes, that's 66%. So there's been a real rebound in demand in the new homes market. And I can tell you at first-time buyers, the number of first-time buyers looking at new homes up 87% since the trough right in the middle of lockdown. And we know that the first-time buyer interest is weighted slightly towards new homes. So 45% of the interest in new homes coming from first-time buyers. These are people who self-identify. But in the resales market, around a third of people looking at homes are first-time buyers. So it's definitely weighted towards the new homes market. And there are key reasons for that. As all of us will know, Help to Buy is a real draw at the moment, especially because of what's happening with mortgage lending in the rest of the market. And we'll come back to that later in the presentation. Also, the really high quality CGIs that new homes developers and house builders have always used, and also virtual viewings, have really meant that new developers were really kind of ready to go as soon as lockdown kicked in, and people had to do much more over their screens, on their laptops, on their mobile phones. So really strong bounce back in demand for new homes. And when we break that down by region, you can see that it's really the Northeast, West Midlands, East Midlands, this kind of Midlands and up slightly to the north, really leading from the front. Down to the right-hand side of this chart, we have London still showing growth, but just lagging like we saw in the resales market, the rest of the market. The Southwest is quite an interesting one. And we think this is probably spurred by the fact that we saw a lot of people looking and interested in homes in those southern coastal cities. So that might be existing homes already sitting on the waterfront. And so that means that resales interest is just outnumbered the new homes interest, but still on every market, on every measure across the UK, demand is up compared to where we were in early March. When we break it down by price band, it's new homes priced between 300,000 and 500,000 that are leading the way, but that was a very close call. There's increased demand at practically every price level. Now, this chart from Capital Economics I thought was so interesting because it shows construction activity from housing. And what I was really drawn to was that V shape at the end, because quite frankly, everyone loves a V shape at the moment because that's what we're hoping for the economic recovery. But that real bounce back in activity, not really surprising, but good to see evidence of it on a chart. As you will all know, you've all been back in business way before anyone on the high street was allowed to open and other parts of the economy were allowed to keep going. So that is really shown now in the figures. And what's interesting about this chart is that Capital Economics have correlated what's going on in construction activity with new home starts. And that bounce back in activity would suggest that new home starts start to rise into the beginning of next year. But as they've said, the other factors, the other economic factors weighing on the new homes market at the moment means that that's not really a given. Construction activity has picked up. All of us will be discussing it this morning, but we may not be at the levels which would suggest a pickup in delivery of new homes until we're looking maybe down the barrel of much later in 2021 or 2022. So some of the key policies also impacting on the new homes market and some things to think about as we move ahead. Help to Buy, bit of a disappointment that Rishi Sunak didn't talk about this at the summer economic statement. I mean, the stamp duty change, which I will come back to, is a real boost to the market and affects the whole market. So all homes will really benefit from that. But the Help to Buy, maybe hopes of an extension for the current scheme past April 2021. But never say never. There's no guarantee that it won't happen later this year. But Help to Buy is still a real driver into the new homes market, and especially for first-time buyers who then can keep applying right through till 2023. We know that sustainability is being maintained as a key driver for the government at the moment. They talked about sustainability. They talked about that insulation grant at the economic update. So sustainability is key on the agenda, even though we've got COVID, even though we've got Brexit, it is key on the agenda. We had Barratt just announced that they want to be kind of net zero carbon by 2030. So that's a real key policy to look out for. And then what does COVID mean for the type and location of homes into the future? Where might sites be viable now where they weren't before? And again, I'll come back to this on the next slide in terms of what we're seeing about what people are looking for and in what locations. But there's no doubt about it. We are seeing greater demand in areas around, just beyond current commuter zones, because it's true, if you're only going to be working from home 1 or 2 days a week, your tolerance for commuting will grow. And so there's real opportunities for sites, for developments, just beyond the current kind of commuter cutoff. Also, infrastructure is going to be key, not just broadband, Wi-Fi, 4G, although these are going to be absolutely crucial from now on, given that we're all still working from home. But trying to just start out on greenfield site can take so much longer. You need the roads in there, you need the infrastructure in there. So the government really needs to give support to be able to deliver that infrastructure and be very clear about what it's going to do into the future to really help boost development across the country. So I mentioned before, is there a big exodus? Is everyone saying now's the time we want to move to the country? The answer is not really. When we look at buyer demand, we can see that the bounce back in buyer demand for rural locations has been slightly higher than urban locations. That's true, but there is still real buyer demand for city living. What we've also seen is more searches, however, for outside space. So of those people who put a search term in when they're looking with us, we've seen the number of people looking for gardens nearly double. We've seen the number of people looking for balconies rise by 166%. We've also seen a rise in the number of people looking for terraces and for swimming pools. So we do feel that there might be a post-COVID change in how people are choosing to live and where they want to live and how they want to live. But we can see that there's still demand in urban areas. So it's that kind of wider commuter zone that there's real opportunity. So now, what do we feel is happening to pricing? I want to run you through some of the factors currently having an impact. So here is our index of house prices. Now, this is our 3-monthly growth rate. I know, sorry, there's a lot of different colours and a lot of different lines, but really, I just want to draw your attention to that dip at the end. So we're just seeing a slight slowing in the 3-month rate of growth in house prices, but we're still in positive territory on the 20 city index, which can really be seen as a proxy for UK house prices, and in various cities across the UK. Across the UK and house prices, we're still up 2.4% on the year. And we feel that pricing may actually be supported in Q3 before it starts to come on a downwards trajectory. So there's been a lot of speculation that there'll be really solid price falls in 2020. And actually, we think that it's going to be a longer process than that and well into 2021. And one of the key reasons for this is, first of all, asking prices. So asking prices is we look at the asking price of everything sold on the website, and we just average it up. There's no modelling applied to it. Now, we don't use it really for anything except as an indicator of direction of travel. And as you can see from this chart, it really works quite well. When we put them together, it's been telling us what direction things might move on the house price index, although the volumes are slightly, very volatile compared to our house price index. You see that at the end of 19, and as we got into January and February this year, as we talked about the market much more exuberant, we knew what was happening in the election, we knew what was happening with Brexit, asking prices rose. They fell during lockdown, and now they're back up 7% year on year. So the likelihood is that this is actually the activity in the market that we're seeing at the moment, probably putting upwards pressure on pricing just at the moment. Also, when we talk about that demand putting upward pressure, which demand are we talking about? There's two different cohorts emerging. We have the pent-up demand of people who had their transactions stalled. We estimated it was around 373,000. But there's emerging evidence now also that we have a new cohort, a kind of a COVID new buyers cohort, people who used lockdown to reflect on how they were living and where they were living. This also comes back to that rural-urban description as well. Because a survey from the ONS said that during lockdown, around a quarter of people, or more than a quarter of people, said they were going to make a big life change. And a third of those said that that was going to be living somewhere different. And when it's an ONS survey, and that's kind of using as a factor for the whole population, there's quite a lot of people who've maybe had to think about how they're living during lockdown. So this kind of additional demand coming to the market. So these, the pent-up demand and the new demand all coming to the market, feeding into a rise in asking prices. But however, we have the economy, and we know that while asking prices and demand, and that demand supply and balance may also be putting upward pressure on pricing, we know that the economic outlook is probably counterbalancing that with downward pressure on pricing. But that will probably be more to the end of the year. And this chart shows us why, because the activity PMIs, the Purchasing Managers Indices, shows that there has been a kind of V-shaped bounce back in activity. But the real question is now for the UK, what happens now? It's this gap between where we are now and how do we get back to where we were at the end of last year. And that is the key question, and that is why we have a cloudier economic outlook. We know the government's approach has been to offer a lot of schemes and policies to help support the economy, and yesterday's statement being no different. But even so, we know that there's going to be rising unemployment, and those will be coming through in official figures very shortly. We may be prone to more local lockdowns. So between what's happening with COVID and the outlook for the economy, it's looking cloudier for Q4, and that may start to put negative pressure on pricing. An additional factor is the availability of mortgage lending. So this is really crucial for the resales market in particular, where people with smaller deposits won't be able to access the market unless they can get mortgage finance. This chart from the bank shows us the scale to which mortgage lending came off, or the availability of mortgages to take out really came off. And the reason for that really was mortgage lenders were very busy looking after everyone who needed a mortgage holiday, nearly 2 million people. So their ability to offer new lending was curtailed to a certain extent. But the question is now as to how far this lending will come back, especially for 90-plus mortgages. Now, there's been a bit of good news. A couple of lenders are back in the market, whereas they'd come out a month ago. But still, the number of 90 and 95% mortgages currently available to buyers is nowhere near the levels it was before lockdown. So if people can't get access to that finance, that will have an impact on activity in that area of the market. However, for new homes, Help to Buy is the other option, and people can use the Help to Buy scheme with a smaller deposit to use that scheme to get onto the housing ladder or to move into a new home. So stamp duty, it really is a boost. So we've talked about, the balancing factors in the market at the moment, and upward pressure on pricing in the short term, downward pressure in the longer term. But this stamp duty will run right through the end of the mortgage holiday, will run through the kind of end of furlough. So it really will be a bit of a boost to the housing market, and of course Rishi Sunak, the Chancellor, hopes the wider economy, because more activity in transactions and sales means more investment, because people are buying new fridges, new freezers, they're using home movers, they're out spending on the high street. So it really is a boost. The map that I've shown you here is really to explain who's going to benefit the most. There are many areas in the north of England where average prices suggest that people aren't paying very much stamp duty, if any at all, for most transactions at the moment. The areas in red are where people will benefit most from this change. There are savings of up to £15,000 on offer, and it's really that outer commuter zone of London, out into the southwest, up into Hull, up into Cheshire, that will really benefit the most from the changes and the announcement that Rishi Sunak made yesterday. But it is really good news for everyone in the housing market at the moment. So that will help provide support for pricing, for activity in the market over the next year. So it feeds into all the factors affecting the market as we see it. So the balancing factors we have at the moment, demand versus supply, putting upward pressure on pricing at the moment. We have that additional policy boost, but we know from the economic outlook, there's going to be perhaps downward pressure on pricing towards Q4 and into Q1 in 2021. So we can see that activity levels are up. We can see demand has risen strongly and now moderating, as we would expect. Pricing, we think, will be steady through Q3, and we'll start to see some impacts of that negative pressure on pricing through Q4 and into Q1 2021. But we know there's a lot of conversations with buyers going on to really engage them so that that process will continue right through the end of the year and into next year. So that's our outlook for the market, and I'm very happy to take any questions you might have.
Well, Grainne, thank you very much indeed. Grainne actually recorded her presentation very late last night to ensure it was up to date and able to take into account the Chancellor's comments yesterday. But I'm delighted to say that Grainne is live with us this morning, and very shortly after we've heard from David Livesey, she will be taking your questions. So do keep those questions coming in. Quite a few of you have already done so. One question that we have had, just to clarify one thing, and I'll make it clear again later, the slides will be available early next week, and I think our production team, our events team, will be sending you some sort of link so that you're able to access those. And indeed, there will be a replay of this webinar on our website as well, probably from early next week as well.